If you've been out of the loop for the last few days, then you've missed the latest and the best David and Goliath story of recent time. We've seen retail traders take it right to Wall Street, take the fight right to Wall Street and beat them at their own game, almost bankrupting them and definitely making them cry to the Wall Street overlords and the government for protection. Now, in this video, I'm going to break down what happened, break down who the players are, how this all went down. I'm going to explain what delta and gamma, what the squeeze was, and what this means for the markets right now. And of course, moving forward, what this means for us and our investments moving forward. So let's go. All right, if you're new to the channel, my name is Mark Moss. I like to talk about financial markets, money, protecting our wealth, because we are going into what I call the final wealth transfer. And if you want to have options for yourself and your family, then it's important for you to take responsibility for yourself, which of course you're doing by watching this video. All right, now today we are talking about the way retail traders have battled with Wall Street and basically brought them to their knees. and I said crying, and I almost really mean crying. They've lost over $5 billion. $5 billion just this month, and they've done that through the GameStop stock, symbol GMD. But look, this is nothing new, right? I mean, for perspective, since money markets have been around, they've been manipulated, right? We know that. We know that money has been manipulated, basically since the beginning of time. Since goldsmiths were putting gold coins together, they started making them less and less pure. As a matter of fact, the banking system has been so manipulated that over 100 years ago, Henry Ford famously said that if the people knew how the banking system worked, there'd be a revolution overnight. So this is nothing new. They've been doing it for a long time. And of course, Wall Street always manipulates the markets, right? They're moving in, they're taking huge positions, they're not telling what they're doing shorts. We're going to get into that. But we know that the banks are constantly getting fined for this. We know that JP Morgan has recently settled the largest fine in history for manipulating markets. So we know they do this all the time, but of course it's okay if they do that. But let's talk about this move specifically. So this happened with a squeeze. I'm going to explain what the squeeze was and how it worked. But basically, it started with a short. And so whenever you want to short a company, you're betting that it's going down, right? You're selling it short. So I think the stock is going to drop, and I'm going to do that. Now, a lot of times this is done maliciously. And so companies would establish a giant short position and then start trying to release news about the company or do something to cause it to come down. Now, this is nothing new. Most people know who George Soros is, maybe from the political side, but he is also one of the most successful investors in history. And really what put him on the map was he broke the bank. He broke the bank, he shorted the pound, and he broke the peg. I think he made $1 billion in a single day by doing this. And so there's lots of reasons to short the market, short different companies. Of course, the cliche on Wall Street is that Wall Street works on the balance of greed and fear, right? So we want greed, like we need to want to go make the money. We need that motivation. But at the same time, we're supposed to have fear that we could lose. And so the balance between wanting to get ahead, but also fearing to lose it all is typically what keeps things in check. But if you haven't noticed, those checks and balances have been thrown out the window, especially since 2008. In 2008, the financial system made all these bets on the market, which I'm not going to go into, but they made all these bets on the market and they lost, right? And they lost big, but instead of them actually losing big, what happened? The government bailed them out. Of course, it wasn't the government, it was the taxpayers. So they were able to benefit from the greed, but they didn't have any fear, and it's only gotten worse. And lately we've seen, the bailouts get worse and worse, and lately we've been seeing greed been overrun by fear. Now, there is a new emotional driver that's in the market right now, and it really started after 2008. After this happened, we saw Occupy Wall Street, and really it's grown into a point right now where we've seen this emotional driver really anger and rage. I mean, we've seen, from years, decades of generational injustice, massive amounts of corruption and unfairness. And so basically the battle line was drawn. And so that's what we're going to talk about. So the battle line was drawn over a company called GameStop, symbol GMD. And basically they're a video game retailer, right? They have about 5,000 stores, mostly in the US, North America, but throughout the world, 5,000 stores. And lately they've been struggling, right? I mean, they're an old business model, most like a blockbuster movie. movies, right? And so most of that has moved online, but they're still a traditional brick and mortar business. And so their model hasn't modernized, and so they've been struggling with that. And so what happened is they got caught in a short and a gamma squeeze. All right, so I'm gonna explain what a short and gamma squeeze is. Okay, so the battle is, on one side we had Melvin Capital, and they established a massive short position, about $55 million, and they tried to do a short squeeze. And so basically what that means is they pile on all these shorts, and they're basically betting that the company will go down. Like I said, a lot of times they'll even start putting news and press and stuff like that out there to really even force that down. So when the price moves down, they make money. That's the short squeeze, all right? But on the other side of the battle line was the Reddit forum, specifically Wall Street Bets. Now, Wall Street Bets has about 2 million subscribers, and they're on the other side, and they're what we call a gamma squeeze. And so if Melvin Capital is betting that the market's going down, squeezing it, trying to push it down, doing everything they can to push it down. While on the other side, Reddit, they're trying to push it up, the gamma squeeze. And so how they do that is they use call options. And they're using call options to push the price of the stock back up. And what happens is when they're buying a call option, someone has to sell it to you, all right? And so what you do is you pay a little bit of a premium. You don't have to pay for the whole stock. You pay a little bit of the stock, but what happens is if it goes up in value, then they have to buy it and deliver it to you. All right. So you have market makers that are in the middle, and the market makers are the ones that are basically facilitating this bet. So they're going to take your little bit of a premium, and then they're going to have to go buy that stock and deliver it to you. Now they have to assess their own risk exposure, right? So if they take a bunch of little premiums, but then they have to deliver all that stock, they could lose a bunch of money. And so what they do in order to hedge this risk, in order to not have that much risk exposure, when the market maker sells you the option, they take your little bit of a premium. They'll typically go into the market and buy some of that stock, the underlying stock. That way, if they have to deliver a bunch of it to you, they have some of it right there, all right? Now, the amount of the stock that they decide to buy is based on what we call the delta. And the delta is basically a ratio of how much the option price moves relative to the amount of money that's in the stock. That's the delta. And so they have to assess their own risk. They have to figure out how much they want to do. But the gamma is the rate of change of the delta of the option. So those are the two things. As the delta and the gamma start to rise, the market maker gets more and more nervous because he has more and more and more risk exposure. And so what are they going to do? They're going to hedge that risk. So of course they're going to go buy more stock to hedge the risk of the option. And this becomes somewhat of a self-fulfilling prophecy because then they have to go buy more stock to hedge the risk of the option. They're buying more. They don't, if the option has to get exercised and they have to deliver that, then they want to hedge that. And so as they do that, it pushes the price of the stock up even more, which means that they get more nervous. They have to go buy more stock, which means the price goes up even more, and on and on and on. Like I said, a self-fulfilling prophecy. So that is the war. We have the market makers that are purchasing the stock. Now they're purchasing a lot of this GME stock to hedge their positions. And when they do that, like I said, it drives the price of it up, and the delta and the gamma call options went up. Now, so far in this battle, the short sellers have been losing. As a matter of fact, they've been losing really, really big, and they've lost more than $5 billion this month. Now, some of the players, like I mentioned, we have Melvin Capital on one side. They had about a $55 million short position, and that was the short squeeze. And then we had the Reddit forum as well. But we've had other people that have gotten involved in this. So we had Elon Musk that came out and kind of showed a little bit of support, tweeting about it. And I think that gave some of the Reddit forum members a little bit more boldness, and they jumped in more. We saw Chamath, he came in, got involved. Even Mark Cuban started tweeting about it, saying he loved this. And then, surprisingly, somebody I almost never could agree with, we saw AOC even come out in support of these people doing it. But of course, Wall Street's not going to take this laying down, right? They're fine if they're the ones doing the manipulation, but if you try it, no, it's not for the plebs. And so Wall Street started fighting back. Because Reddit was winning the war. So what did Wall Street do? Well, they do what they always do. They went and got bailed out, of course, right? So Melvin was on the verge of going bankrupt, and they had to go get bailed out by Citadel and Point72 to the tune of $3 billion. So they started with a $55 million short, and they kept piling in more money to protect that short. So as the price, they were betting to go down. As the price was going up, they were losing more money, so they had to keep pouring more money in, and they went to their Wall Street overlords, begging to get bailed out like they always do, $3 billion. But it wasn't enough. They had to keep going. So, of course, they recruited the rest of their friends. Who are these friends I'm talking about? Well, the stock is traded on the NASDAQ exchange. That's where most tech stocks are traded. And so NASDAQ came out and said, we're going to shut down trading. We're going to start monitoring all this social media. And if we notice any type of communication and weird trading activity, we're going to just shut it down. You're not going to be allowed to trade it. As a matter of fact, we've seen TD Ameritrade, we've seen Robinhood that have completely shut down where you're not even able to buy that stock anymore. Then that wasn't enough. We saw Reddit and Discord start taking action. As a matter of fact, Discord shut them down and said that they were violating hate speech. Now, the only hate speech that I saw was that Wall Street hates losing money, and I suppose that's enough, but this is a very dangerous precedent. I believe we'll see more and more things being shut down, censored, justified for hate speech. Of course, that's not enough. Then the SEC got involved, Securities Exchange Commission. They came in, they said that they're going to look into this, right? They're going to look in, they're going to start dishing out damage. So you see, they went and got bailed out, and then they use all these corporations and government entities to enforce their will. Of course, then they want to get the media on their side. They got CNBC going on TV today talking about how this isn't safe. A lot of these people could lose money, and the government needs to step in to protect them. And so the government should be protecting them and not allowing them to invest their money. I mean, that makes sense, right? I mean, I guess if we just put people in a cage, they'll be pretty protected, but already investors aren't able to take advantage of pre-IPO deals. You have to be accredited. So of course, the insiders get all the good deals. When it goes to public, finally, the average public can buy them, and then they get dumped on over and over and over again. So these rules that are meant to protect you only damage you even more and only create the divide between income inequality even more and more. And of course, if you're paying attention, this is a massive double standard, right? When Wall Street manipulates the markets, it's all good, right? But when it happens against them, they get mad. And not only do they get mad, they leverage the war against you. Now, like I said, George Soros famously broke the bank $1 billion in a day, and it was okay for him. It was okay for him, but it's not okay for you. But personally, for me, I love it. I love to see people fighting back, raging against the financial machine. That's what I like to say. But Wall Street and the Fed, they got a lot of money. So it is a dangerous battle. We have the Reddit founder or the Reddit forum members that are pushing the price up, but Wall Street can just go get billions of dollars of more money. And so you have to be careful. I guess like any battle, right? You have to be careful. You could lose it all. And so while I love the fight, I'm definitely paying attention. I love to report about it. You want to be careful if you're getting involved in this fight. Understand what it is that you're doing, because I think it is just getting started. The battle is picking up. As a matter of fact, they're talking about going after the silver market next. And that has massive implications. If you think that the shorts were big against GameStop, now moved on to AMC, things like that, wait till you see what the shorts are on the silver market. I mean, why is silver the same price as it was decades ago? Silver is the most manipulated asset, and they say they're coming after that next, which of course is really good for our gold and silver positions. So let's stay tuned and watch. I'll be reporting as more information comes out. And that's what I got for you today. All right. Give me a thumbs up on this video if you like it. If you don't like this video, give me a thumbs down, but tell me why. Leave me a comment and let me know what it is that you don't like about the video. All right. That's what I got for you today. To your success. I'm out.